Hello traders, this is Bio from Forex Winners Club, ready with a new video on Forex Orders. I believe that after watching our previous videos, you are now ready to start trying out some trades even as you learn. And if that is the status you are in, or if you are still an intermediate or even an experienced trader but sometimes have issues understanding how to use the various forex orders that your broker provides and which are also available on your charting platform like MetaTrader 4, then this video is for you. Stay with me. Talking of types of forex orders, our key intention today in this particular video is to cover the definition of an order in Forex so that you understand what it is when people talk about orders. And number two, to be able to demonstrate to you the various order types in Forex and demonstrate actually using MetaTrader 4 how to enter each of these types of Forex orders. I know some of you have asked before, how do you use a stop entry? I don't know. I've heard about it. How do you use a trailing stop loss? I don't know about it. I've read about it, but I don't know how to do it. I will be able to demonstrate that right in this video, so stick around. Up next, order, the definition. Now, the definition of an order is very simple. An order refers to how you enter or exit a trade. As a trader, for you to buy or sell a financial instrument, in this case a currency pair you are dealing with, for you to buy or sell a currency or to buy a pair or sell a pair, you must use an order. And in this case, that is what we call an order, how you enter a particular trade or how do you close it. Now, there are various types of orders in the market. One is a market order. We talk about it. The other one is limit entry order, classified into two or subcategorized into two, buy limit and sell limit. We have a stop entry order, which also has a buy stop, a sell stop, and a stop loss order, and a trailing stop loss order. Now, these are the orders you really need to be familiar with. There are those others with weird names. We'll not talk about them now. Okay? These are the ones you need most of the time, if not all the time. So, market order, the first one, market order simply refers to an order to buy or sell a given asset or instrument at the best available price in the market. And so, it's like saying, I want to buy now at the current price. Also, it's just like saying, I want to sell at the current price. If that is your intention, maybe you can see price has met a certain criteria on your chart after your analysis, and you feel like where the price is currently, like your candlestick, if that's what you're using on your charting, is the optimal place for me to buy or to sell. Then that's when you need to use a market order. In other words, consider an example. Euro USD is currently having a bid price of 1.3240. Remember from previous video on Forex Concepts Part 2, we talked about these things. I think Part 1 of those, you want to check the previous videos. 1.3240 is the bid price. Now remember, the bid price is the price at which the broker buys something. That is the broker sells something to you, and is the price at which you are supposed to for you to sell, and the broker buys. This is the price at which the broker buys an asset, and is the price at which you sell the asset. And remember, the offer price is now the opposite. Okay. Now, if you click buy, let me just take you over and demonstrate the market order. I'm assuming we are here. Look at where we are. This is where we are. The price is currently here. Okay, where the candle is. This is Euro USD 1 hour chart. I'm assuming I want to buy, and I'm saying buying Euro USD, it means I'm projecting that price will start moving up. That's what we call a buy. Okay, so in that case, you're buying at this level. Now, for you to buy at the current price, you don't expect the price to move up or down before you buy. You want to buy right where it is. You use a market order. And how do you do that? Follow me closely. you will, on your platform, look for the asset you want to trade, Euro USD in our case. So I go to Euro USD here on the market watch window. Euro USD, I right click and choose new order. Okay. And I will say buy. Here we go. I just made a market entry order for buy. And you want to see where it is? This is called a terminal window. My terminal window down here. Let me go to which trade is currently running. I want to see which trade is currently running. We have a Euro USD. We just bought a Euro USD. It's active now. You can see Euro USD. If I double click that, it will take me back to where we were. We just bought Euro USD, one volume or one unit. Okay, that's market entry. Now let me close it. Then close it from here. Right click on it and choose close order. It's closed. Now let me do the opposite. Assuming I want to sell, maybe let me drag a different pair. Haha. So now I want to sell Euro card. No, this is USD card. This USD card. I want to sell at the current price. Okay. So it means what I'll do is, let me just mark that level so that you see where we are going to make the entry into the market. Here. So when I sell, my intention is that the market will start moving down. That's what you call a sell. Okay. So let's do that. We will still right click on USD card, choose new order and choose sell by market. Ensure up here the type is always market execution. I need to emphasize that. I know by default, whenever you choose new order, it's market execution, but always ensure it's not pending, rather it is market execution. Then you click sell. Here you see, we are selling at the current price. We are selling at the current price. And your order is down here, USD card. Okay? So that is how you do it. That's how you do it. Let me close it because I didn't intend to trade it. There is a tool you can use. Just right click on a chart and one click trading. The two options are available. Let's use maybe a different pair like USD JPY or AUD JPY, for example. 1 hour chart still. I may want to buy. What we did, I can execute it using this shortcut. Just enable one click trading. Enable one click trading, like you can see. Just right click on the chart and choose one click trading. Then this will appear. If you click it again, it will disappear. So one click trading. So let me buy immediately one volume, or you can choose the volume you want to buy. Decrease it, increase it. Okay. So like we did one volume, let's just do one volume for demonstration purposes. So let's buy. Do you see? Okay. Let's sell. Do you see? Now we have two orders, buy and sell down here. Okay. AUD JPY, buy. AUD JPY, sell. We bought and sold at the same price. I know it's silly to do that, but just to demonstrate that you can use this shortcut. Okay. So let me close. You can also either choose right click close, or there's an X here, a tiny X at the end. Just close there, and the two trades are closed. So that is it with market entry. You buy at the current price or you sell at the current price. Over to this, just a chart to show you how to choose market execution, and I've demonstrated that in advance. So let's move over to limit entry orders. Now limit entry orders are interesting. This is where you are projecting that before I can buy, I want the best price. Let market move down fast before I buy. And if you look at what's happening on our chart here, price is currently here, where this, I believe that's a magenta dot. So price is currently here, but your projection is I want price to first move down to where the green line is. Then when it hits the green line, which means there's a specific price you are targeting, then you can buy and the market will potentially move up. The opposite is sell limit, where this is where your price is, the current price is. When I'm talking about current price, it means like here. This is the current price here, where the market is at the moment. So market is there, is here. You are projecting that I want to sell, but fine, before I sell, let it move up. Then I sell at a better price and market may move down. Same thing happening. This just now they're using the actual chart. Price is currently here, and you are projecting for me to sell. Let price first move up to that level, and when it touches that price level, there has to be a specific price here. Then the market will automatically sell for you. For you, a buy would mean price is currently here for you to use a buy limit, and you are saying, yes, I want to buy, but at a lower price. So I would wait for price to move down first. When it hits my price, I would then buy so that potentially I can benefit if the market moves up. That is the difference between buy limit and sell limit. So over to MetaTrader 4 to show you how we can execute these trades. Now we are having a pound. We have a pound dollar chart 1 hour. Let me say, for example, I want to sell if the market comes to this price. Okay, the market going to that price, I will sell. That's what I'm saying. If the market comes back to this level, let me just make it thicker. So I'm selling if price comes up to this point. So remember, at that point I'll be selling downwards. Or if the market comes down to this level, then I want to buy. So here I'm buying, here I'm selling. So let me just executed a trade I did not intend. Sorry, let me close it. It's down here. All right. So I wanted to change the color of this so that it's red for sell, this one for buy. So I'm saying the market is currently here. This is where the candle is, the current price. So if price moves down and touches this price, the price is 1.27367, I will do a buy. This is what we call a buy limit entry or a buy limit order. So when I do a buy here, my projection is the market will then move up and I make profit. Okay. Then for me to do a sell, price is here. I am saying I will do a sell only if price comes up to that level, like that. Then when it touches my price at that level, let me show you what the price is at that level. The price at that level is 1.28270. You can see it, 1.28270. So when the price touches that level, then I would potentially do a sell from there and make profit if market moves down. Okay, so how then do we do that? So I will first, let's do as a buy. The best is you can read this price here, 1.27367, or you can double click on your line, choose the line. You can choose properties. This is horizontal line properties. Go to parameters and copy the value there. This is the current price, as you can see, 1.27367, 1.27367. This was an extra decimal. Copy that. And then you go to the pair GBP USD here, new market, new order. Now this is where you choose type as pending order. Great. It's not market execution. This is now pending order. And you are entering what type? We are doing a buy limit. We are here, buy limit. Buy limit. And then you enter the price. Copy the price, paste it there. I've pasted it. Then I'll say place trade. You see there's a trade placed here? Can you see that? Buy limit. Check down here. It's a buy limit. And the trade is not active. If price comes and touches that price, if the candle comes, any other candle comes and touches that price, then a buy will be executed immediately. Okay? So let me cancel that. We didn't intend. Now let's do a sell. Again, double click on that line, choose properties, go to parameters, copy that. So you are doing a sell limit. And we go to new order. A new order on the currency is GBP USD. You click new. You choose type is pending. You also choose type below as sell limit. Then you paste your price there. Then you see place a trade. You can see there's a sell limit placed here. Meaning, if price moves from where it is to touch that line, a sell trade will be entered in the market automatically by your broker or by your trading software. You don't have to worry about it. And this is very important. Sell entry, sell limit, and buy limit are very important, where you analyze the market and then decide, maybe I'll be away, but I know this is a nice price to buy at. This is a nice price to buy at or sell at here. So you enter this trade and you move on. When the market moves to that place, the trade is executed automatically for you. So that is it with buy limit and sell limit. Okay, those are just charts you can post to see this is exactly what we are doing. Sell limit. Okay, so pending order, then sell limit. Again, pending order, buy limit. That's what we did. So let's move to to stop entry orders. Stop entry orders. Now, stop entry order, these are orders placed to buy above the current market or to sell below. Are slightly different. Now look at it, guys. The market, look at where the dot is. For you to do a buy stop, this is where the market is. So assuming the blue dot is where the price is at the moment, you are projecting that should price break above a given price, then you are sure it will continue to the upside. Okay, so the green line represents where you buy. So it's like a breakout. So for you, if you are a breakout trader, this is very good for you. The previous one, sell limit and buy limit, are very good for reversals. So this is for a breakout where you are projecting that if price moves from here and crosses this line here, which is a particular price, then it's likely to continue up. So you do a buy from this level. So a buy stop is an order placed above the current price, and the assumption is price will keep going up. A sell stop works in the reverse. Price is currently here, and you are saying that should price move to a given price level, then it means it is likely to continue to the downside, and you will do a sell. So demonstration of this. Okay, I'll show you how to do that. All right, they're just the same thing. But now over to our charts. Oh, did I close this? Let me close it. All right. Let me clear these objects from my chart. Here we go. So your prediction is like this. Let's use a different pair now. Maybe Euro AUD, the Euro and Australian dollar. This analysis, your analysis says that if the market comes, it's now moving down, and you believe that it's likely to continue. So it's like, it's likely, you believe it's likely to continue moving down. Maybe you have done your analysis, and you believe that if price happens, let me shorten this. If price happens to cross this price, if price comes to this level, it's likely to continue downwards. Are you getting it? This is a sell order. That price, if price comes to this level, okay, let me just maybe do an extended line. If price probably comes to this level, let's try this one. You believe then the market is likely to continue down. So you do a sell below the current price. And for you to do that, let's go to our pair Euro AUD. It's still pending order, but this time it's not a buy limit. We are selling, so it's a sell stop. Sell stop order. Then you paste your price there. And you place a trade. So you see, there's a sell stop here. Meaning, if this candle came or another candle came and touched this price, then the market, in other words, the broker will execute a trade for you, and the trade is a sell trade, meaning you will only benefit from the trade if the market goes down. Are we there? On the same, let's close that. Let's assume now where the market is here, and you believe that if the market moves from this level, maybe and crosses this line, let's make it green for a buy. You believe that the market is currently here, but if it moves up and touches this price, then the assumption is, from your analysis, the market is likely to continue up. So you want to do a buy at a price higher than the current. That's when you do a buy stop. How do you do that? Copy the price. Head over to your market watch window, new order. Choose type, pending order type, buy stop. Paste your price there. Sorry. I was supposed to paste that price. Let me copy it again. So Euro AUD, Type is pending, and type down here is buy stop. So you paste there, you click buy. All right, meaning even though price is here, you have instructed your broker or your software, whichever you look at it, that if price moves up and hits that price level, then you are ready for a buy to the upside. So guys, that is how you do buy stop and sell stop orders in the market. So over to stop loss, a very important order type. Now, a stop loss order is an order associated to a trade to prevent further losses if the price moves against your predicted direction. Now, in other words, a stop loss order is the one that you put and say, okay, I'm buying. But if the market does not go up and instead goes down to a certain price, it means I'm wrong. I want to close my trade. Okay? You are also saying if you are selling, that fine, although I've entered a sell trade, if the market continues moving up instead of moving down, like my prediction says, up to a given level, it means I'm really wrong. And I want the broker to close that trade for me. So that's what you are doing. So effectively, if you are trading, if you are buying, that means you are going long. A stop loss is the same as a sell stop. Remember, if you buy to close the trade, you must sell. If you sell, like go short, to close the trade, you must buy. So a stop loss is the opposite of the trade you entered. So if you entered a buy, a stop loss would be a sell to close the trade. If you entered a sell, a stop loss would be a buy to close the order. Okay, so a stop loss order remains active until the position is satisfied or liquidated, or until you cancel. So two things can happen. Let me show you how to enter stop loss. Okay, before we talk about trail stop loss. So assuming we enter trade here for buy, we want to buy the market. We are doing a buy, so for demonstration purposes. So let me even do a buy immediately using the market entry order type here, buy, activated. So we have bought Euro AUD. We have gone long on Euro AUD. But you're saying fine. You know, when you do a buy, your projection is the market should move up so that you make profit. But the market can still go down. The market can still go down. So in the case, if it goes down, you start making losses. Of course, if it goes up, you start making profits. So you are simply saying, I have bought at this price. However, if the market goes down, maybe to this level, it really means I'm very wrong. I should exit. Or if it moves down to this price, it means I don't want to sustain the losses. I'll be very wrong and I might be losing more money I don't want. So a stop loss helps you prevent further losses. So you take that price. I've shown you how to do that. So you are saying this is your stop loss now. So these are buy order. These are stop loss order. Okay. So you come and say, I want to enter stop loss. This is AUD, Euro AUD. It's still a new order. Okay. But this time around, you are modifying actually. So you don't go there. You modify. You click on your order. The one you entered. This one. Okay. I think I've done something crazy. Let me remove this line. So let's first buy. Let me remove this line. It's confusing me. I buy. So I have bought Euro AUD at that price. And my stop loss will be down here, meaning I don't want to lose beyond this level. So I will then double click on that line. This. That's one option of doing it. Okay. Or down here. And choose modify or delete. So this is the order. It is Euro AUD. Right click on it. Modify. Now, when you are modifying, a modify is used to enter stop losses in most cases. Actually, we use it. So remember, type can be market, pending. Remember, initially we had market and but when you have a trade running, the market or the chart introduces modify order. Remember that. You cannot enter stop loss unless there's a trade currently running. Remember that. You only enter stop loss if you have already entered an order to buy or sell. So now that we have one, there is modify order. Okay. So, how do I enter then my stop loss? I already have the price, 1.68718. So I will come and enter my stop loss at that level. Okay, stop loss, paste it here. Okay, and I say modify. Very good. SL, can you see it down here, guys? This is my stop loss. So the market, if the price continues downward instead of going up and touches this price, this trade will be closed. Of course, at a loss. Okay, the trade will be closed at a loss. So let's do the reverse. Let's do a sell with a stop loss. Now, when you close your trade, your stop loss is equally closed. Okay, so let's do a sell, maybe with a different pair, USDCHF. So you are doing a sell this time, and let's do a sell at this level. Market entry, sell. Very good. We have a sell order. So a stop loss for a sell order would be above the price. Because you are selling, you are projecting that the market should go down. But nothing stops the market from going up. Okay? So you are saying, okay, in case the market chooses to go opposite my prediction, I don't want to continue losing money. I want the market to close the trade if price reaches here. So you choose this level as your stop loss. Later on, I'll show you how to choose the stop loss properly. For now, we want to show you how to simply enter a stop loss order. So you choose the price. So if the market goes and touches that price, this trade should be closed. So how do you do that? The trade is down here in your terminal window. You can click on it, right click on it, choose modify, and copy your stop loss, paste your stop loss here, and modify. Click this button, modify. Now you have a sell order here. You also have a stop loss for your order. So you have two orders, a sell and a stop loss. Effectively, this stop loss is a buy, the opposite of sell. Okay? So that's how you close your trade. So you can close your trade by closing here. If you close the trade here, even the stop loss order is closed. Okay? But remember, you can remove the stop loss if you don't want it. So for now, let's just close the stuff. So that's it with stop loss, guys. Always trade with a stop loss, recommended to avoid losses. Now, a trailing stop loss, some people call it a trailing stop. Now, a trailing stop is a type of stop loss order associated with a trade that moves as the price changes or fluctuates. Now, the ones I've shown you is where you enter one stop loss, and the stop loss is entered at a specific price like here and is permanently fixed there, waiting for the market to come to that price for it to be triggered. And if it never comes, that order will not be executed. However, there are cases where you can trade with a stop loss that moves with the price. Stop loss that moves with the price. Okay? Now, in that particular case, look at the chart we have here. This is a type of order associated with price that is changing or fluctuating. So let's say down here, you entered a trade somewhere. Your trade was entered where the circle is. And because it's a buy order, you are hoping that price will move up, but still price can go down. So down here, you entered your stop loss. Are we there? You entered a stop loss to protect you against further losses if the market goes against your direction. Then as price moved up, you realize price has gone quite a bit. You said, fine, I would want to have a trailing stop. In other words, I want to move my stop loss above so that I can either break even or I can still make some profit even if the market closes by executing the stop loss order. So you put your trailing stop somewhere here. This is one trailing stop. Because you notice price has gone up, come down. So a trailing stop, you only enter here if the market is above it. So you entered this stop loss here when the market was above. So saying, should it come again down here, you are ready to close the market or to close the trade. So the market fortunately went up, okay? And as you can see, went down, then went further up. So again, at this point, you are saying, I'm happy, I've made some profit. So if the market wants to go below, never. I don't want it to close below this level. That way, I've made profit between where I entered and that level. Then you realize it comes down a bit, okay? Then makes another move up, okay? And still comes down. You're still in the trade. So you're saying, oh, goodness. Now I've made some money. I don't want to lose more. I enter new stop loss here. And I want, if the market comes to this level, I will close the trade automatically. Then the market still fortunately say climbs up. Oh, sorry, the market climbs up. It climbs up, then moves down. So at that level, you say, oh, by the way, I have another entry here. So if the market comes below here, from that level to this, I should close this trade. So that's a stop loss. It keeps on, that's a trailing stop loss. It keeps on adjusting with the price. But remember, trailing stop loss has a specific set of prices. Not prices per se, but you are willing to, you're entering a stop loss that moves with the price some pips away from price. Like 20 pips. So you say price moves up 20 pips, I adjust my stop loss by 5 pips upward. So let's demonstrate that. You enter trade. Let's enter trade here. Let me show you how to enter a trailing stop. So you buy here. Then you want to enter a stop loss that moves with the price. So as price moves up, your stop loss keeps following price because we are buying. If you are selling, as the price moves down, your stop loss keeps moving down with it. So that's a trailing. Trailing is to follow. It follows. So you choose here, right click on the order on the terminal window, choose trailing stop loss and say maybe 15 points. You're saying, 15 points. So in this case, your trailing stop is 15 points away from price. Okay, so if price moves down by 15 points, your stop loss adjusts. If it moves another 15 points, your stop loss adjusts. And that's what we call a trailing stop. Let's do another one for a buy. So you execute a buy here and you decide I want a stop loss that follows it, that is 20 points behind it. So in that case, you have entered one. I think I've entered already a stop loss. Let me see. Modify order. We entered already. I think we have already entered a trailing stop, if I'm right. So trailing stop, we say 20 points is active. So that means when the market moves up, your stop loss also moves to some level here. If it moves further up, your stop loss moves up. If it moves another level, stop loss moves another level. So it keeps on following price all the time. So that is a trailing stop loss order. And that brings us to the end of this video, which is approximately half an hour long. But I thought I would pack everything in this so that then we know what orders are and how to do this. Up next, in the next video, I will be talking about Forex brokers. I'll be talking about trading environments, demo and live. When should you use demo? When should you use live? When should you use both? We'll also be talking about charting software. In our example, we have used MetaTrader 4. There are many others. So one of the videos coming up next will be about one of these, if not all of them combined. I intend to be producing shorter videos so that the concentration span is not too much. Otherwise, thank you for trusting me and trusting our channel. Stay subscribed and have that notification bell hit so that you're notified immediately there's a new video uploaded, so that you're able to watch with us. Comment, share videos, and like them. Let us know if there are areas you want us to cover. Remember, we thought we would have a channel that starts from basics upwards, so that beginners and intermediate, even experts, are able to have their content covered at the appropriate time. Thank you so much. Welcome to the next video that will be presented to you in the next few days. Stay in touch. Bye-bye.